Hey there everyone! Today we are diving into what Trump's election win means for crypto. Now let me set a few things straight. I'm not American, so I'm looking at this purely from a crypto angle. And for those feeling frustrated about Trump's winning, well, it's done, so let's focus on the potential upsides, especially for the global financial markets. We will dig deep into how this shift could shake up the crypto landscape, and trust me, it's going to be interesting. So get comfortable, grab something to sip on, and let's see what the new era could mean for your portfolio. Let's take a quick look at Trump's general approach to crypto and finance. Donald Trump's victory in the US presidential election has the potential to shape cryptocurrency regulation, tax policy, and investor sentiment in major ways. During the campaign, Trump notably shifted his stance, showing support for cryptocurrencies, making appearances at Bitcoin conferences where he outlined a few promises, and even launching his own NFT collection. Potentially relaxed cryptocurrency regulations under a Trump administration could stimulate market growth and attract new investors. However, his traditional economic views might limit the development of decentralized finance, which aims to transform traditional banking systems. In the tax sphere, Trump proposed exempting Bitcoin transactions from capital gain tax, which could simplify the use of cryptocurrencies in everyday transactions and situations and increase their appeal to a broader audience. And remember, under Gary Gensler's leadership, the SEC has taken a strict stance on cryptocurrencies, often classifying many digital assets as securities and pursuing enforcement actions against various crypto firms. This approach has been criticized for creating regulatory uncertainty and hindering innovation within the crypto industry. So naturally, one of the Trump's most important decisions was to give a promise to fire Gary Gensler day one of his presidency, and they quote him on that.
On day one, I will fire Gary Gensler and appoint a new SEC chairman.
Trump's plan to fire SEC chair Gary Gensler could transform the US crypto landscape, loosening the regulatory chokehold that many believe has stifled innovation. Gensler's strict approach labeled many digital assets as securities and hindered the approval of ETFs, making crypto investment in the US complicated and risky. Trump, with the new SEC's appointment, could accelerate ETF approvals and reduce regulatory uncertainty, fostering a framework that supports both investor protection and innovation. This shift would make it easier for institutional and retail investors to access digital assets, potentially fueling mainstream crypto adoption and growth across the country. So while Trump's pro-crypto shift could be purely for show, it does not matter. It still impacts the market, and after all, we're here for the gains. But what about the details? Well, for starters, let's talk about the headliner, of course, Bitcoin. It is going to move high and move high fast. I'm talking Trump Tower high. Bitcoin hitting the 150k is almost imminent, and reaching 200k is also fair to expect. Why is Trump's victory significant? Not because Harris' potential victory would have cancelled the season, but rather because it would have imposed tighter regulations, causing many investors to pull back. Under Harris, Bitcoin's ceiling might have been just 120, 130k. Now it's likely closer to 180k, 200k. Trump will likely print a lot of money, which traditionally boosts classic financial markets. On a strong market, high-risk assets grow well as people shift profits from safer investments to higher-risk ones, hoping for larger gains. And in the current climate of rising inflation and sharply declining real incomes, people are increasingly drawn to high-risk assets. The reason is straightforward. Prices for housing, food, and other essentials are growing much faster than wages, meaning that real incomes are actually shrinking. In this context, investing in low-risk assets doesn't make much sense, since they typically yield like 2, 3, maybe 5 to 10% per year at best, which does nothing to offset the decline in purchasing power. People are drawn to high-risk assets in crypto for their potential returns in the hundreds or even thousands of percents annually. In tough financial times, many are willing to take those risks, knowing traditional savings and investments won't be enough. Furthermore, both profits and direct investments will flow in. President Trump is pushing for a US Federal Reserve initiative, and we've got Bitcoin and Ethereum ETFs lined up. This makes it legal and easy for big money to flow into Bitcoin. To put it into perspective, The S&P 500 cap stands at 50 trillion, while Bitcoin is around 1.5 trillion. And that's counting all the lost bitcoins and unconfirmed transactions, so the real cap might be less than a trillion. That's a 50x gap. For the first time in 2024-2025, crypto isn't just catching the eye of retail investors. Serious funds are finally paying attention. The conservative target is 150k, but the high-end target 220 to 130k. Easily. Trump's election win could be big for Ethereum. A pro-business administration often leans toward deregulation, which means more favorable environment for crypto. If the administration pushes for relaxed crypto regulations or encourages financial innovation, Ethereum could thrive. Ethereum CTO from BlackRock also plays into this. Big money can easier enter the Ethereum. Now investors can simply buy Ethereum on Nasdaq without the need for crypto exchanges or complex registrations. Compared to Bitcoin's 1.5 trillion market cap, Ethereum's smaller 300 billion valuation positions it as an appealing option for diversification, especially among funds and retail investors reluctant to sign up on exchanges. The ETF boost is already visible, otherwise Ethereum would likely be trading 5 to 10% lower. With Bitcoin priced at a $100 premium on Coinbase due to BlackRock and other ETF providers aggressively buying there, the momentum is real, driving retail interest in both BTC and ETH. It's instinctual. As crypto gains traction, the traditional market offers two major buy options: Bitcoin and Ethereum. This results in a roughly 70 to 30 split in favor of Bitcoin, but Ethereum's thinner liquidity is making its price rise quicker. So in this scenario, Ethereum could see rapid adoption, especially with institutional support growing. Trump's win might signal a bullish phase for Ethereum, fueled by both policy shifts and mainstream financial entry points like the ETF. Solana's getting real attention with a potential ETF on the horizon. Vanek and 21 Shares put in applications back in June 2024, but the SEC's dragging its feet, claiming Solana might be a security. An ETF would be huge, making it easy for big money to flow into Sol without directly holding it, likely pushing the price to $1,000. There's more. As I mentioned already, if Gary Gensler gets sacked from the SEC post-election, we could see faster approvals across the board. A leadership change could clear the way, letting crypto ETFs, including Solana, finally take off. Right now, Sol's projected to hit $500–700 soon, but with an ETF approval, $1,000 is on the table. Talking about layer 1 and 2 solutions. All altcoins with meme presence like TRX, Sol, AFT and Sui are likely to surge, yet it's crucial to monitor on-chain activity. For example, TRX is widely used for transactions and has strong meme activity, which drives its price upwards weekly. Not many talk about it, but it's growing as people genuinely use the network, and its on-chain activity is high. If a network's metrics are poor, there is no point holding the base assets. AI-themed altcoins like FET and AGIX are thriving and show strong potential for growth. A fundamental understanding of these projects is essential, and allocating 5 to 7% of a long-term portfolio to this theme seems reasonable. Singularity Net recently announced plans to merge its AGIX token with FET and Ocean's protocol Ocean into a new token, Artificial Superintelligence, as part of its ambitious vision to advance decentralized AI. This merger could mean AGIX, FET, and Ocean headline coins in the AI space, especially under a Trump administration that may favor tech innovation. Although the exact timeline for the merger hasn't been announced yet, this news alone is quite big, and it feels like the right time to consider adding these tokens to my portfolio. With 70% of the total supply already in circulation and AI narratives gaining massive momentum, the stage is perfectly set for those AI tokens. There is a lot of hype around DeFi, with some thinking Trump might push it forward. But let's be real. DeFi's whole mission is to disrupt traditional banking, and that does not line up with Trump's old-school pro-market stance. While there may be a short-term wave in classic DeFi names like CRV, Uni and Sushi, betting big on DeFi under Trump isn't wise. There's simply no incentive for his administration to boost something aimed at replacing the current US financial structure. Bottom line, don't focus too heavily on DeFi this time around. And as in any season, waves will come. There will be waves for RWA, AI, deping, and more. Some niches like AI are more promising long-term. However, you can still follow local trends and jump into projects that are hot for a week or two. Then it's back to memes. Talking about meme coins market and why it's considered huge nowadays. It is absorbing money from other crypto markets, which is why Bitcoin dominance pumps. Dominance rises not because money simply flows into Bitcoin, but because money flows out of other altcoins and into meme coins, which aren't tracked in metrics like market dominance. If the meme market were reflected, Bitcoin's dominance would likely be closer to 40%, not 60%, as the meme market alone is 75 to 100 billion based on tokens listed on CoinGecko, with potentially millions of tokens in existence. Although we can't precisely determine the total market cap, it's likely at least 500 billion, and with Trump's in power, the market will only grow. People love gambling, and meme coins are where easy money is. So the meme market already seems huge, but it's going to be 10 times bigger than it is now. When economic conditions worsen, people are more likely to take risks. And in the current economic pressure, meme coins have become especially attractive because they allow for quick gains in a short time. Sometimes several times the initial investment in a day or even 100x in a month. This is something you can no longer easily achieve with more established assets like Bitcoin or Ethereum, which trade on centralized exchanges. Of course, it's more of a casino. Your deposit might simply do a round trip. And by the way, let's set an example. US people can open a Coinbase account, pay 40% tax on profits, which will be sometimes less than the inflation in taxes, cover the fees. It's just not appealing. But trading memes? Just hop on DEXs, get anonymous wallets, fire up a VPN, trade and enjoy. No one's coming to your door asking about the crypto assets in your wallet. The best way to trade memes is to find an expert who knows the scene well. Gradually invest, track hype waves, and buy into the trends of the moment. But don't consider meme coins the most reliable income source. It's primarily for fun and culture. If you make money, great. For anyone new to crypto, you're in luck. Bitcoin, Ethereum and Solana are some of the best picks right now. Why? Because compared to last month, they're looking unexpectedly juicy. You could be looking up to 4x returns in the next 6 to 9 months. Wanna go beyond the basics? Stick to coins with real utility. Focus on what's actually being used. Projects with strong on-chain activity like TRX, Sui, AFT and so on have solid potential, and AI-themed tokens like RNDR are hotter than ever. When exploring smaller projects, niche projects can be exciting, but they're pure speculation. Dive in only when the hype's building, but don't fool yourself into thinking it's a long-term strategy. Limit your meme coin investments to no more than 10% of your portfolio. Sure, that 10% might explode to 100% if you hit the right coin at the right time, but more likely you might just do a round trip. Social media only parades the winners, so don't think you're the next crypto genius just because you caught one lucky break on memes. Be safe, stick to quality over quantity, and don't bet your entire portfolio on luck. Alright, that's the rundown. No matter where you stand on Trump, his moves are about to set the tone for crypto for years. And the biggest play, I guess, giving Gary Gensler his long-awaited holiday and some deregulation policies. That's the reset the space needs. If Trump follows through, we're in for a whole game. Whether you like it or not, Trump's here, and his moves are setting the stage for the crypto market's next act. If you liked what you heard, don't forget to like, subscribe and hit the bell so you don't miss a thing. And hey, follow our Telegram channel for the latest updates and behind the scenes insights. Thanks for sticking around, let's see where this ride takes us.